Something just happened on the XRP chart that most creators are either not seeing or are only telling you 50% of. And I need to be honest with you today, because the half they are leaving out is actually the part that matters most. XRP is sitting at $1.42 right now, and the weekly RSI just dropped into territory it has only visited 5 times in XRP's entire history. Every single time before, that signal preceded a major macro bottom. But here is where I have a problem with how this story is being told. I want to give credit where it is due. The core thesis circulating right now is correct. The weekly RSI is genuinely flashing an extreme oversold reading that lines up with the 2022 bear market bottom, the FTX collapse period, and other historical cycle lows. That part is real. I have run the data myself, and it checks out. If you are sitting there feeling like the floor might drop out tomorrow, the chart is actually pushing back on that fear with some pretty compelling evidence. But here is what the videos making the rounds are not telling you. An oversold RSI on its own has never been a green light to stop thinking. It is a yellow light that tells you to look more carefully. And when I look more carefully at the full data picture right now, something does not add up in a way that actually makes this moment more interesting, not less. Let me walk you through exactly what I mean. And I want to be upfront, this is not financial advice. I am sharing what I personally look at when I am trying to make sense of where XRP stands. You make your own decisions. So the source video opens with Larry Fink's comments about crypto being in the 1998 era of the internet. And look, that is a legitimate reference. When the CEO of BlackRock, the firm that manages over $11 trillion in assets, is drawing that comparison publicly, that is not noise. That is signal. We have the same institutional class that built the traditional financial system, now publicly stating that the infrastructure they are building on top of will run on technology like XRP. The DTCC integration through Ripple Prime went live on March 2nd of this year. Deutsche Bank, Societe Generale, Aviva Investors, MasterCard. These are not speculative partnerships. These are live infrastructure relationships. The fundamental picture is genuinely the strongest it has ever been. I will not argue with that. Here is where I have to push back. The video frames the current oversold RSI as basically a gift, a once-in-a-lifetime opportunity, the last train before adoption takes off. And emotionally, I understand exactly why that framing lands. Every single one of us who has been in XRP for more than 6 months has felt that frustration of watching milestone after milestone fail to move the price. Of course, we want the chart to be telling us the worst is behind us. But when I pull up the actual on-chain data right now, something immediately catches my attention that complicates the simple bottom narrative. This is the part that is getting left out of the conversation. Whale wallets in March 2026 accumulated approximately 110 million tokens. Exchange reserves dropped to 12.9 billion XRP, the lowest level since May 2021. When I see data like that, I notice cold storage accumulation at this scale typically comes from players who are not planning to sell anytime soon. That is genuinely bullish structural behavior, and I think it is being undercovered. If you want one data point from this video to hold on to, that is the one. But here is the contradiction. In late February, before that accumulation, whales also transferred over $650 million worth of XRP into Binance in a single week. That is the largest single week exchange inflow of this entire year. The same class of large holders that appears to be accumulating in cold storage also spent weeks distributing aggressively into exchange order books. So which signal do you trust? Both are real, both happened, and the video that is circulating right now does not address this duality at all. It shows you the bottom RSI signal, it shows you Larry Fink, and it tells you this is your last chance. The mental model it gives you is essentially just vibes plus one chart. Hit that like button if you think the community deserves more than one chart as the basis for their conviction, because I want to show you what the full picture actually looks like. The 7-spot XRP ETFs currently hold just over $1 billion in combined assets under management, with approximately 773 million XRP tokens locked as of this week. That sounds impressive until you run the math. At current prices, that is roughly $1.1 billion in a market where XRP's total capitalization is $88 billion. The ETFs are absorbing supply, yes, but the weekly inflow data has slowed dramatically. There was a day in mid-March where total daily net inflows across all 7 funds came in at 0. Now, I want to be careful here. One flat day is not a trend. Cumulative inflows remain at $1.2 billion, which represents real institutional positioning. And there is a structural reason ETF flows can look flat even when purchasing is happening. Franklin Templeton, Bitwise, Grayscale, and the others operate on settlement cycles and execute purchases through over-the-counter desks that do not show up in the same-day flow data. The real accumulation is often invisible to retail traders for days. This is the actual context that changes how you interpret the oversold RSI signal. The RSI is telling you selling pressure is exhausted at the retail level. The on-chain whale accumulation in March is telling you that sophisticated capital is quietly building positions. The ETF structure is telling you institutional demand exists, but has not yet hit escape velocity. And the $650 million exchange inflow from late February is telling you that even some large holders who accumulated at higher prices are still working through their position. Subscribe if you want XRP analysis that actually gives you a plan, not just hype. Because what I am about to tell you is the one thing I think changes the calculus here. The video being responded to frames the Middle East conflict as essentially already priced in and no longer relevant. And it might be right. Polymarket was assigning roughly 70% probability to some form of Iran escalation 3.5 months ago. The fact that markets sold off before the event and have been stabilizing during it is consistent with a classic buy the rumor, sell the news structure playing out in reverse. Geopolitical risk got priced in, the event happened, and now the question is whether resolution becomes the catalyst. Here is what I would add to that framework. XRP is not trading on XRP fundamentals right now. It is trading on Bitcoin. Over the past several months, XRP price movement has tracked Bitcoin's direction approximately 80% of the time. Bitcoin is sitting in a contested zone, facing resistance with macro headwinds still present from tariff pressures and interest rate uncertainty. Jerome Powell has not given the market any reason to believe rate cuts are coming fast. Until Bitcoin makes a decisive move, XRP will have a hard time leading a recovery on its own, even with the RSI at these oversold levels. This is the part of the bottom narrative that requires intellectual honesty. The RSI signal is real, the historical precedent is legitimate, and at the same time, the conditions that would allow that signal to actually translate into a sustained move require Bitcoin cooperation in a macro environment that we do not currently have confirmed. So what does this actually mean for you as an XRP holder in 2026? I am not going to leave you with just an analysis and no framework, because that is exactly what the video being responded to did. Here is how I am personally thinking about this. The weekly RSI at these levels has never permanently broken down. Every prior visit produced at minimum a significant bounce, and in most cases a macro trend reversal, exchange reserves falling to their lowest since 2021, while whales add 110 million tokens in a single month is the kind of structural setup that historically precedes supply shocks, not continued collapses. The ETF complex, even with its current modest inflows, is removing tokens from liquid supply every single week. That math accumulates. What I am watching specifically right now is whether XRP can hold and close above $1.42 on a weekly basis. That is the level several technical analysts have flagged as the trigger point for a potential breakout toward $1.60 and then $1.85. A clean close above that level with expanding volume would change the near-term picture meaningfully. What I would tell anyone using the RSI alone as their framework is this. The signal is not wrong, but it is incomplete. The version of this analysis that actually serves you is the one that holds all the contradictions at once. Bullish infrastructure, ETF accumulation, whale cold storage buying, and also whale distribution at higher prices, flat ETF daily flows, Bitcoin correlation, and macro headwinds. Both stories are true simultaneously. The community that can hold that complexity without panic selling or blind accumulation is the community that ends up on the right side of what comes next. Tell me in the comments, are you still buying XRP at these prices, or are you waiting for a confirmation signal above 142 first? I want to see where the community actually stands, not just the hype. One last thing before I go, share this with one XRP holder in your network who is basing their conviction on a single chart right now, not because this video tells them what to do, but because they deserve the full picture before they decide anything. The data I am watching is telling me we are in the most interesting structural setup XRP has been in since 2022. The RSI, the whale data, the exchange reserves, the ETF architecture, every signal points to a market transitioning from distribution to accumulation. Whether that transition completes in weeks or months is the one variable the chart cannot tell you. What the chart can tell you is that at this level of oversoldness, in all of XRP's history, the direction from here has eventually been up. And with the institutional infrastructure now in place that did not exist in 22, the setup for that eventual move is genuinely stronger than anything we have seen before.